face. How's everyone doing today? I talk a lot about some old Wall Street adages, and I recall after the election, people were pretty giddy. I'll admit I didn't do anything up here, and I'm still looking for up here. That idea may soon be negated because NASDAQ leading the way to the downside has already taken out its October low, I believe. Yeah, right here. The adage is bears feast on Thanksgiving and the bulls feast on Christmas. So what a beautiful adage, just got short anywhere into Thanksgiving. So write it down. I'm not saying it always works. There are many years during the bull phase where, the bears didn't feast on Thanksgiving. The bulls ate at both holidays. But, it's interesting to know. It's like Turnaround Tuesday, and just a lot of these, or never sell a sleeping market, things like that. All the turkeys are scared. I'd be scared if I was a turkey too, Zig. Just walking, gobbling around, and then you head towards the chopping block. So we all know what the chopping block is because we're traders, right? So we've been chopped up from time to time. And I think one of the best antidotes for that is becoming a member of ForexAnalytix. The crew has a surprise on Monday. They call it Cyber Monday. So they have a promotion going. It's going to begin Sunday night. And join our team. Be part of our team and have Blake working for you like a dog 24 hours a day. Greg making special guest appearances, but you'll always know where he stands on his wave count. Stelios in his macro, and also, his participation in the chat room with his big ideas, long-term ideas. Steve, we all know Steve Short. I think, I don't know if he got back in, but he caught a big piece of this sell-off from those highs. Joe's good, why he's a reason why he's good. Blake was his mentor, and I found out yesterday Joe was the last mentoring mentee that Blake accepted. And then the great addition before the end of the year of Paulie Franco, and you have to be a member to catch his European crossover as he goes through the spreadsheet and gives you points that there should be some reaction to. And Amanda, you guys know, she's a great trader. Andre is excellent analyst in harmonics, not a great cook, but his harmonics are excellent. So, it gives you something to look at. I think it's Sunday night. So at the end of your day, after watching football and all the tryptophan from the turkey begins to, wear off, come to our website and you'll see what the offer is. It's going to be a real good one. Okay, so, just back to the markets. Are we going to crash here? I have a hard time wanting to make big commitments during holiday shortened weeks. I do think, though, the dollar, there's going to be a chance to sell this dollar. I don't think we're going to go to a new high for a third here, but a rally back towards 97-ish, 96.80, 97, I think would be a decent entry with stops over the high. So parallel to that would be, the euro maybe around 113.40 to 113 even, and you got a pretty good stop loss point. If this was a false breakout and now we're above it, I don't think we should close back under 113. The picture would change for me in the dollar. So with a little dollar bounce coming, the yen is still under a lot of pressure, but there are some divergences beginning to develop on some of the short term, the hourly. As you can see, this was our last confirmed low back here All right, I think that was early yesterday. And now new lows are not confirming, especially this one here. So there might be a scalp because, you know, now we're talking about almost 200 pip move from these highs up here, 1420. So why can't we rally 80 pips from wherever the low comes in, rally back to Blake's number 113? But I can definitely say this, and then I'm going to hand it over to Blake. Isn't it strange on, you know, how an instrument can be a beach ball, and then when nobody's looking, you know, it just turns. And obviously, if you push this beach ball underwater, it's not going to have the same pop. It might stay there, but rallies back towards 13, you know, 10 to 30. I'd be all over them if that happens. So still favoring the short side of the dollar. Not sure I want to play counter trend, but know what I'll do if counter trend happens, you know, next week, because, you know, close Thursday, Friday, you know, not much going on here in the U.S. Most people take it off. I think markets close early, like they do on Christmas. You know, abbreviated session. And right now, I think a lot of the bulls and the S&Ps are hoping for an abbreviated session right here. So we'll see. But I'm focused on the dollar. I still think this is a significant top. And, you know, you're not late. You know, I was talking short Swiss last week. You're not late. I mean, this may just be the first wave, you know, and then we could end up with a 1.618 of this 160. It'll give you 250 from, say, we get up here. That's going to be 94.30, right? So where's 94.30? And why can't we trade all the way back down towards the really shake out all the dollar bulls and take out stops here? People are saying, Dale, how do you know where the stops are? And I say, well, if you're long the dollar, where would you have your stop? Blake yesterday talked about 96 support, another, you know, what a great eye. That's what we're holding right here. But a lot of positions, sell stops under 95.60, which was a pivot point, and then down here, there's a ton of stops, and here's the grand prize when all the dollar bulls give up, and that could be, you know, I've seen counts to the 92 handle. So I'm looking at this week as an opportunity, if offered, to short the dollar 680 to 97. And with that being said, you need to also talk to Trent and Justin. I know there's times, you know, I could get a better commission deal if I moved, and, you know, we all get settled in, and, you know, is it worth it? And, you know, Steve finally did it, you know, but we all procrastinate things because you get comfortable with what you have, even if it's not, you know, you make compromises, right? Because you're lazy about making a change. I can only say that because you know, I know about that because I have that in me. But Steve found out he would have gotten a check for $1,000 if he just would have moved, you know, 2-3 months later. So you have to talk to Trent, excuse me, and Justin.
Brent oil.
Yeah, I know. Brent Crude. Brent Crude. You know, that'd be a great name for a trader. Hi, my name's Brent Crude. Do you know that I actually knew a guy whose name was Ron Risk? What do you think of that? Huh?
Yeah, that's good, actually.
I was thinking of changing mine to Buck Cash. What do you think? But I think I'd have to change it again if we're, you know, in time getting pretty close to a major dollar high, and, you know, the dollar is going to get trashed. I don't know. Maybe I'll become Euro Eddie Euro. How's that? How about
Not
Gary
bad.
Gold? Huh?
Not bad.
All right. So Blake, I know, I know you're, you know, rolling your eyes.
I am.
You know, come on.
You know what's funny though is no one got the joke except for the team here that Andre is a bad cook. And so
oh yeah.
kitchen, literally.
Oh my God, you're gonna make it even worse.
The rest of us were
Yeah.
laughing when you said that, and I don't think anybody else got it. So it was pretty funny.
Anyway,
Not if you
I'm-
lived in Andres' house.
Yeah,
In that case, it wasn't funny.
Thank God his
Probably.
daughter made it out, and his wife made it out okay. Anyway,
dangerous meal. Yeah.
Yeah, dangerous to say the least. I hope everybody's having a great trading session. So equities are a little weaker this morning. I say a little weaker; they're actually quite a bit weaker.
This is a good day now.
Yeah, the S&P is slipped below that 618 retracement and actually just below trend lows. But, I'm going to point out just a couple of things really quick. We have a long-term, trend line that we're coming up to, which is, this is actually the reason why that trend line is there is not, it wasn't specifically meant as a trend line. It was more of a, it was more of an AB equals CD type of move, but you can see that the legs are equal, and it actually ends up being a pretty it ended up being a significant trend line where I just adjusted it where you can see the lows, and we're coming up to it. But anyway, we actually are below the 618 retracement, new trend lows here. You can see them right here. The thing about the S&P is the DSI also registered at 12, so it's the market's going in, we're going into this market pretty bearish already, so you got to be a little careful sentiment wise that we won't get like a snap back turnaround Tuesday type of thing. It's entirely possible. One thing I have to also point out is the lack of participation that we've seen in the FX market due to the last couple of days. I mean, let me just give you an example. So this is the S&P right here. Let's go ahead and compare this, and let's overlay the euro yen just to give you an idea of the lack of follow through. And let me change this to a line. I hate how the trading view changed this, so I'm gonna put this on the line chart. Get a little bit better view. So you can see the S&P really broke down. And the euro yen, I mean, it came down. Yes, it came down, but did it come down aggressively like the equity markets? No, it hasn't. And that's been the complaint that the guys in my office has spoken about, is just the lack of follow through that we've seen in FX based on the equity market sell off. Now, does that mean currencies are right and equities are wrong? No, not necessarily. And there's probably a lot of other factors that are moving the FX market other than just risk on, risk off. But that lack of follow through to the downside probably has people that are short, euro yen or Aussie yen, or maybe the guppy, the pound yen, maybe a little bit nervous being on the short side of them, because if equities, like let's say equities end up putting in a false breakdown and we end up bouncing here, does that provoke all the people that were short the euro yen to reverse course and buy back their euro yen? I would think it would. And so that, I think, is a risk if you're trading the yen pairs to the short side. I have to say that the dollar yen is weaker, but man, why isn't the dollar yen trading down at 111 or 110? I think if we were, and let me just draw this out really quick. If the dollar yen was down here, like somewhere down here around 111, I'd feel more comfortable at this moment saying, this equity market sell-off is really significant. But because we're not, I'm hesitant to be a huge believer in this equity market sell-off being more than just a correction and a consolidation. So the S&P could be doing something more like, I don't know, maybe I'll just draw it out for you really quick. And again, I don't know if I'm right or wrong. I'm just kind of talking to you guys. Let me get rid of this magnet here. We could be doing something like this right now versus in an aggressive versus being in an aggressive sell off, we can end up finding some sort of support down here, and I don't know if it's here, maybe down here. I don't know. I'm just talking out loud right now. I think that if you are short risk in currencies. So when I say short risk in currencies, that would be, if you're short the dollar yen or euro yen or, pound yen or whatever, just be a little careful that we just haven't seen the type of moves that I would be expecting or I would have expected in this equity market route that we've seen the last 2 days. It's been pretty aggressive in equities. I mean, you look at the S&P, from a percentage standpoint, I mean, we've dropped, 3% in 2 days. You may say, oh, it's only 3% in 2 days, but 3% in 2 days is fairly significant in my opinion. And so to not see the currency market really respond too much does, a little concern. There's like one of the currency pairs that typically will rally quite aggressively with risk aversion is the US dollar Canadian. The US dollar Canadian over the last couple of days has really struggled at the 132 level. We went up to 132 yesterday and we backed away. We're back at 132 right now, but it's not like we're trading at 132.50 or even breaking in a new trend high. So these are the types of things that that have my attention, that doesn't necessarily make me want to get long risk. I just think you got to be a little bit more careful at this point in time. The euro is pulling back this morning. The euro's pulled back. I picked up a little bit of euro this morning, and I'm not really too happy with it. I bought it when it was trading at this trend line here. And my stop is obviously, where would, like Coach said, where's anybody else going to put their stops? My stops are down here, but I just don't know if I'm going to stick around in it too long. I don't like how the euro is acting. I'm, like I said, I'm underwater just a little bit, but I'm not going to stick around too much longer, especially if equities continue to sell off. I don't want to hold it, but I have to also admit that the euro is still holding up pretty well, and I can't forget to let you guys don't let you guys lose sight of the euro dollar really had a false breakdown. So let's not forget this. This to me was really big, and this is one thing that that sticks out like a sore thumb. This little false breakdown caught everybody off guard, and so I think that the positioning right now in the euro dollar is still position long dollars, short euro dollar. Not saying that the euro can't continue to come down today. I'm just saying that longer term, it's the one thing that's keeping me not bearish the euro at this moment, is that we had this false breakdown from last week. That typically will yield, if it's on a weekly basis. Okay, so a weekly basis. Last week we broke down and then we reversed. That usually will yield you a couple weeks of a reversal. So this being the first week of a reversal. And so when we're down here and you're like, well, now the euro is going to roll back over, my question is it really? And after having that weekly reversal candle, I'm assuming at some point this week we are going to be breaking 115. Now, again, I may be wrong. Equity markets may sell off another 4% from here and completely derail that food for thought. Okay, so just again, some things to think about. The cable, actually, believe it or not, the cable's holding up pretty well. We had the inflation report hearings this morning, and despite all the uncertainties surrounding Brexit, I'm really impressed how well the cable's holding up. Not saying that it's going to continue to hold up. It's just it is holding up relatively well. I thought by now we would be trading down at 127. We're not. And so if you're short the cable, you're probably thinking the same thing as me. Why is it not down there yet? I don't know. And then that resiliency could turn into, at any point in time, could turn into panic short covering, just because the market is so bearish sterling or cable. So just keep that in mind. The Aussie is pulling back as you would expect on this false breakout. One of the, so I'm thinking that we're coming back down here to the previous channel. The breakout point, which would coincide with like the 38% retracement that comes in around 72.20. I would think that's where the Aussie's going, especially if equity markets continue to be weak. The Aussie should pull back towards there. The Kiwi is extremely bullish. It's so annoying because overnight, the Aussie New Zealand dropped to 106, actually below 106, took the stops below 106 and is bouncing now currently. And I think that if you were up last night during the Aussie New Zealand, sell off below 106 and you picked up the Aussie New Zealand near 106, did I just say 106? I did. 106. That was a Freudian slip. That was probably the place to do it. Now sorry, things come out at so early in the morning.
Steve would. That would make
I hope everything is okay with the wife.
Right. Everything is it's good here. The Kiwi dollar is very resilient, and it's been super strong. I'm surprised that the Kiwi is holding up as well as it is, especially with this little kind of false breakout that we had yesterday. But I think things could turn nasty for the Kiwi if risk aversion continues. But like I said, I don't know if I'd really, I think the markets are probably going to consolidate from here, especially ahead of the long, weekend, I would think. But we don't know. And just watch the Kiwi, this little false break yesterday, and the 200-day moving average, you can see, sits right up, above the pair. The Swissy has been weak and it's been breaking lower. Now that's interesting because, you have the euro dollar that's been relatively strong. The Kiwi finally started to roll over. We are, nearing the 38% retracement, which is important for the Kiwi, because if we break below 99 cents, then that's, that is going to be further, it's going to mean further dollar Swiss weakness. Now, I'm not an advocate of shorting dollar Swiss. I just don't. I don't. It's way too expensive. B, I only want to be long the dollar Swiss, but I missed the whole rally over the last month and a half. I missed this whole move, and I'm extremely irritated as a result. But I'm not going to short it. So what I would personally be looking for, and what I will be looking for at some point, is just to drop down to like maybe 97 cents to be long down here. That's the way I'm going to play the Swissy, rather than trying to get long on this dip. I'd rather see it give a more significant dip, because I still feel that the euro is going towards 115. So I think that'll pave the way for the dollar Swiss to continue lower.
Your chart of the day yesterday, Blake, was great on USD NOK and USD.
It's the Swedish krona, actually. It was the US dollar.
It was the SEK? Okay, because the NOK looks like it could make another high, but the SEK is right there in the trend line. So you're using that as a kind of a analog for the dollar.
I'm actually, you'll notice there's an alarm set right here, right there, that I have set up just in case I'm sleeping and it goes off, or it goes off when I'm just not paying attention. I get notified, because we don't follow the Swedish krona typically, so it's something that I'm I don't trade it that often. However, the dollar or Swedish krona, if it does start to break down, that is going to be, it has always been a canary for me. It's a canary in the coal mine for the dollar index. And if you read the blog, you can read up a little bit more about that. But
that's a great tip.
Yeah, it's something that if we see the US dollar Swedish krona start to break down, that will be my indication that the euro is probably going to be heading towards that 115 level. And I noted that the relative strength, and it looked better yesterday because we are seeing a bounce in price, even though it's small, we are seeing a bounce in price. And so the relative strength is bouncing a little bit, but we have broken through this triangle that we've developed in the US dollar Swedish krona. So on relative strength. So it looks like we're going to eventually break down. And so I'm kind of waiting for that before I get, too bearish the dollar. But it is something that is, excuse me, in my opinion, worth noting. And one last thing I'll go over. I know we talked about the dollar yen, but like I said, the dollar yen, it is a little concerning that the dollar yen hasn't broken down more aggressively based on equities selling off. By the way, gold is stronger too, and you got to see gold is actually at highs of the session. I've owned gold for a couple of days now, and it's continuing to bounce, which is nice. I'm happy about that. Obviously still big resistance. All 1235 to 1240 is all just huge, gigantic resistance. But if you see gold going higher, you've got to be a little careful being long dollars. If there's one relationship that is the strongest relationship in the currency market, and the one that is probably the most consistent, is long gold, short dollar, or short dollar, long gold, or long dollar, short gold, whatever. It's inverse, and it's a very strong relationship, and it's probably one of the best relationships that's most consistent. You do get, from time to time, you will get dollar and gold weakness or gold and dollar strength. Usually that's with extreme risk aversion or extreme risk appetite. But typically speaking, the markets are range bound most of the time. 80% of the time the markets are range bound. So when you see gold going higher and you're long the dollar, but gold is going higher, you have to start being a little careful with what you're doing. And gold, like I said, it is hitting highs of the day right now. And, as we hit highs of the day, if you're short the euro, for example, you need to start paying attention to that we are above that 618. With that being said, I'm going to pass it over to Steve and Stelios. Guys, good morning.
Good morning.
Good morning, mate.
How are you?
Good morning. How are you guys today?
Very good. Very good.
I had one of those nights that I laid down at like 8:30, and I got to bed by midnight. By the
we know what kind of nights you had. You just told us a few minutes ago.
Well, that's 1, 2, 3, 4, 5, 6. What? I don't know what you're talking about. All right, guys. So anyway, it's one of those nights. I'm a little tired, but I hope you guys have a great trading session. And like Dale said, hey, we have our Cyber Monday special happening Sunday night. It is kind of a secret, but if you guys are thinking about being part of ForexAnalytix, you're going to have a little bit more than 24 hours on Monday, Cyber Monday, to take advantage of our offers. So if you were even thinking about, testing the waters with ForexAnalytix, wait till Sunday night and do it. That's the time to do it. Okay. All right. That being said, I'm going to pass it over to you guys. You guys have a great one. Good luck today.
Thank you, Blake. You too,
Thanks,
buddy.
This is your last chance to buy cryptocurrencies. They're on. How did you used to say that on Wise Trade? Blue lane special. How was it?
Blue plate special.
Oh, he's already gone. No. He had an expression.
Special is kind of like a deal on a meal. Yeah.
Yeah. So cryptocurrencies seem to be doing really fine here. I mean, Bitcoin is about to hit the 161.8 of the last corrective move. It all looks very nice and shiny. Ethereum is on its way to 75 because the next target is actually 75. So,
Ethereum is down 90% from the highs. 90.
Yeah, which is, very healthy, actually. We kept saying that, all of those are bubbles because in essence, the problem with cryptocurrencies, and I'm not going to stay long with cryptocurrencies because I know the vast majority of you don't care about them. And
we have numbers in 10 seconds as well.
And in my opinion, you shouldn't even care about them. The problem is that
someone tweeted me who does
Blue Light
trade
Special
crypto
from Kmart. Yeah, Paul
No, he said, I'm never coming on your show again because that guy Steve Volge hates crypto.
Oh yeah, right.
Yeah.
Right. I hope they weren't buying at. Okay, let's go
All
through
right.
the first thing, and then we can talk about the rest because we have a lot to look at today. So Stelio,
yeah.
Numbers are in line, like building permits and
housing starts exactly in line, at least until they get revised. Building permits, housing starts, everything actually exactly in line, although they have been missing everything that has to do with housing has been missing over and over again during the past several months. And we've even had revisions in the vast majority of the cases coming in lower later on. So I would be a little bit hesitant with that because we've already seen the increase in rates affect the housing market quite substantially. Anything that has to do with mortgages, initiations, stock of unsold houses, everything has been sending warning signals. I've been saying that since weeks ago. Building permits, for example, I see month on month of October minus 0.6% when expected was positive 0.8%, and previous was plus 1.7%. So you can see in the data that there is a fast decline in anything that has to do with the health of the housing market. And I think that combined with the auto industry, as we were talking with David Brady as well a few days ago, is a very, very worrying signal about the health of the economy. Now, for me to finish up with cryptocurrencies, the thing with cryptocurrencies is quite simple. They've failed to demonstrate that they can serve any role. I mean, they're even worse than fiat currencies. Why? Because fiat currencies are considered money based on faith, but based also on the credibility, whatever credibility is of a government that backs them. Now, the only difference between fiat currencies and cryptocurrencies is that cryptocurrencies are also based on faith, but there is no government backing them up. So personally, I don't see why any of them will survive. And even if they do, from the 2,100 that we have, only a short fraction will. I believe that the technology is actually going to survive. But I don't believe that the current cryptocurrencies based on this technology are going to survive. Perhaps the technology itself is going to be adopted by governments, to actually evolve fiat currencies, in a different form in the near or not so near future. But I don't believe that cryptocurrencies are actually going to make it in the form that we have them today.
I think that governments would love to have that. Imagine if they can access every single transaction ever made.
Exactly.
That's their dream, right?
Actually, I think that's why they let the experiment go.
I agree with you, Coach.
Don't you know what I mean? So people become acclimated to it.
And you know something, Coach? It's funny because cryptocurrencies, the way they began, were in essence the wet dream of any libertarian. Right. And they're going to end up being the worst nightmare because the technology will end up being adopted most probably by governments sooner or later. But
the end of cash.
Yeah, exactly. The end of cash, which in essence is going to be a huge benefit because
the end of privacy.
Exactly, the end of privacy, and everything is going to happen, of course, in the name of beating down tax evasion and funds for terrorists.
Yeah, like Modi, only he didn't have a crypto in place. He just made certain denominations illegal.
Yeah. Yes, exactly. So yeah, exactly that. So enough said about cryptocurrencies.
Okay.
Just by judging that, the market's approach having to do with the bubble is anything that from its peak drops to 80%. I think that every single cryptocurrency that was out there last year has already lost at least 80% of its value since then. So there is no question about it. All the cryptocurrencies that at least are have been out there for at least a year have proved that they were in a bubble. anyhow, this type of parabolic, appreciation is the very characteristic of bubbles. So enough said with cryptocurrencies. Let's go back to real currencies and real assets that at least have some intrinsic value. By the way, obviously, cryptocurrencies have no intrinsic value. Actually, there is a very good comment I saw the other day, which is very right, and I had been saying that for some time, which is what? That cryptocurrencies have actually negative intrinsic value, because you actually have to spend a real resource, which is, for example, oil or nuclear energy or whatever powers up your house, or the place you actually mine cryptocurrencies from, to produce something that has no intrinsic value. So in essence, they have negative intrinsic value. So now back to real commodities and fiat currencies. Let me just say that yesterday crude had a very nice recovery after testing the lows, but that in essence didn't change once again anything, because what we got yesterday as well is another pin bar. So it seems that the market's ability to appreciate from here doesn't seem to be that strong. Sellers still seem to be in control. So I would be a little bit careful. I wouldn't rule out, a final attempt to retest the 58.70, but perhaps we need to flush out, these lows as well before we end up having a bigger recovery. And I do believe we're going to have a bigger recovery, but having monitored the last 4 days, I think that it might come from, after another leg lower. Now, having to do with gold and silver, nothing substantially has changed, meaning that gold is still within this corrective channel. Silver is making it through this previous support that is now acting as resistance, but that doesn't necessarily mean that there is something actionable here, because now we're once again in the middle of this choppy environment. In order for us to have something bullish in hand, we will need to see a daily close above 1470, 1480. That will actually trigger a double bottom formation, and then we can have an actionable technical pattern that is going to be pointing higher. Until then, since we didn't get rejected from this previous level of support, didn't manage to act as resistance, I would say that in the short term you have to shift back to neutral and wait to see how this is going to get resolved. Obviously, between the two of them, gold seems a safer bet if you're looking for a rebound. I mean, it's behaving since the beginning of the rebound, since they stopped depreciating, which we even saw in that phase. We did see a divergence between the two of them. We have been seeing gold overperform silver, and there is no real signal yet that this will end right here, right now. Still keep in mind that the gold-silver ratio is still in an appreciating pattern. That might prove to be an ascending wedge. So in this case, we might see a complete reversal of how the two of them are doing one among the other. But, since we don't have a trigger signal here yet, you have to, until then, you have to respect the possibility that gold will keep overperforming for a period of time. Now, going back to stocks, and I wanted us to have a look at some specific stocks, because on occasion, for those of you that are daily here, you know that we have been having a look at specific stocks, because for me, they were warning, they were pointing to exhaustion. I remember very specifically that we've had a look at NVIDIA when we were still trading within this wedge. We had a typical overthrow. Just look at NVIDIA. NVIDIA has retraced more than 50% of this parabolic move higher within literally, 40 trading days, something like that, 30, 40 trading days. So this is what we call in stocks up with the escalator, down with the elevator. As you see, this was a typical formation that shows momentum loss and an exhaustion of the bulls. The RSI divergence that was ongoing since January, actually this retest of the RSI trend line at the beginning of October signaled the end of this trend. And, not coincidentally, the high is actually at the first trading day of October. You remember I've mentioned very frequently about seasonality, about how much more likely you are to find a high or a low at the beginning or at the very, very end of a month. For reasons that are easily explainable. I've mentioned them, and I'm afraid that I see no real support until this gap fill at 105. So, this move lower looks extremely impulsive. So I do think that NVIDIA is actually going to make it to fill this unfilled gap that we had. This, by the way, speaking of technical formation, this is the epitome of breakaway gap. This is the kind of a very bullish gap that you see. You see a bullish formation. This was a bullish formation because simply it was a pennant in an uptrend. And when you see breakaway gaps that actually trigger a bullish formation, those are usually very bullish signals. So that was, for example, a very nice trigger, a very nice signal for somebody to be buying NVIDIA. But in the same manner, I believe that this gap, it's about time that we're going to get down there and fill that gap sooner rather than later. I also spoke, I remember, about Apple after every single one of the FANG stocks had actually broken down. I mentioned that I think that Apple is going to be following suit. Back then, it hadn't dropped below this head and shoulders formation. Now it has, and not only it has, but it has also fulfilled the head and shoulders formation target. Even worse than that, it has also broken below this ascending trend line support, and it also failed after retesting twice the 200 daily moving average. So I have to say that Apple doesn't look good either. I think that as long as it stays below 195 roughly, you should consider it, bearish. Same deal with Amazon. If you remember, Amazon was one of the first stocks we had been looking for, and specifically I had drawn this green line speaking about the characteristics of a bubble and the characteristics of a parabolic move. And the first thing you learn about parabolic moves is that they inevitably break down simply because, geometrically speaking, you reach a point that the rate of appreciation is completely unsustainable. Usually, when the rate of appreciation becomes unsustainable, you don't get just a stabilization and a consolidation. You actually get the complete opposite. You get everybody running for the exits, those that were taking advantage of the extreme gains, booking some hefty profits and looking to reload lower, bears finally getting vindicated. And then you see big breakdown moves. And since, you have pockets of illiquid prices because the prices have been moving higher very, very fast, that has actually left pockets of, illiquid prices in between. And that usually creates big moves lower. We've already retraced 50% of the last leg higher. And, I have no reason to believe that this is actually done. Now, the one of the first stocks that actually started failing, and for a very good reason, and I think that even if you monitor fundamentals, you could actually call the top here, was Facebook. Facebook, after breaking from an ascending wedge, we saw that as well. The nail in the coffin for Facebook, besides the fact that obviously it was also in a parabolic appreciation, was the fact the crackdown in personal data, which in essence was what made Facebook being so profitable. So when in essence they had to change somewhat the business model to exploit less the personal information of their clients, that was the beginning of the end. And actually, I'm very, very sorry, because as an economist, I used the very, very wrong term, because those of you that believe that as users of Facebook, you're the clients of Facebook, you're very much mistaken. I've had this conversation very many times with my friends because I don't have Facebook for a very good reason. Because, since the beginning, what I said was the following, that people that use Facebook are not the clients of Facebook. You are the product of Facebook. Now, I'm not advocating that you shouldn't be having a Facebook page, as everything, proper usage of anything can have its positive aspects. Over usage can have its negative aspects. There's no question about it. But as long as you are aware that you are the product, the clients are the marketing companies, right? So as long as you are okay with that as users of Facebook, you are the product and not the clients are the people that actually pay Facebook, so they can target you and your interests for whatever they want to advertise, or whatever else they want to share your data with. That's absolutely fine. Now, of course, since Facebook had, after that crackdown, to change and be more respectful to privacy rules, that means that one of the basic, if not the only tools of monetizations that they had went away, and the result is what you're seeing here. And seeing this big breakdown in this ascending trend, I really believe that Facebook is a sell on rallies. For example, I believe that a retest of this area just below 150 is probably going to yield a very nice selling opportunity. Now, in the short term, we seem to be diverging a little bit, so I wouldn't rule out some type of a rebound, but it is what it is. So, I wanted us to have a fast look at what was considered for years to be the steam engine, some of the stocks that were considered to be the steam engine of growth for equity markets. Let's have a look at Alphabet, by the way, as well. Alphabet, I don't remember what is the... it's Google. So Alphabet, as you see, about to retest. This is Google, by the way, right? So Alphabet retested the other day. As you can see, we can extend. Where is it? There it is. We can extend this ascending trend line. As you see, we've now cracked below this ascending trend line. We've retested this horizontal support zone. As you see, in bear market territory as well, I think that if we lose this also very, very strong psychological level for Google, which is the 1,000 level, that's actually going to be very, very bad news, because the next area of support I see is literally $8 below that. Okay, so I would be watching this broken descending trend line as resistance from this point on. So if we actually manage to indeed rebound from there, I would be watching for something like this. So in essence, I don't see many positive things about stocks and stock markets at the moment. Of course, I wouldn't rule out some kind of a combination that could end up leading stocks and stock markets to one last hurrah. For example, Trump claimed that the worst deal of all deals was the NAFTA deal. What he ended up doing is revamping the NAFTA deal, changing it no more than 2-3%, and suddenly the worst deal on the planet was baptized as one of the best deals on the planet. I wouldn't be surprised if he tries to save face and he manages one way or another to capitulate and reach some kind of a deal with the Chinese, so they can craft some kind of a deal which in essence isn't going to be changing much, but he's going to sell it as a victory. The markets then, for example, might feel that this is a great relief because there's not going to be any more hikes in tariffs, which is definitely going to help the US economy. If at the same time he also manages to agree with some kind of an infrastructure spending plan, which I wouldn't be, I know that bipartisanship seems to be at a peak at the moment, and I know that a lot of people believe that, the chasm between the Democrats and the Republicans is, cannot be actually, get fixed somehow. But I do believe that since the Democrats are always pro-spending, I wouldn't be surprised if Trump managed to pass something that has to do with some kind of fiscal stimulus as well. So perhaps a combination of, let's say, that kind of a resolution with, China and something like that could perhaps push the markets through some kind of a rotation, though, because I don't believe that the FANG stocks and the Nasdaq is going to reclaim the highs, but perhaps, for example, the S&P has a small chance of doing so. But in any case, I do believe that the signs and the clouds keep thickening, and everything keeps pointing to the possibility that the economy, if you remember, I've kept saying that for months, that I believe that by 2020 we're going to be in the next recession, and I think that it's going to come earlier than that. So we have to see what's going to happen during the next few months, but I would be very, very careful being long. That's why I'm still looking for opportunities to be shorting indices and not the opposite. Speaking of indices, I had a friend of ours here in the show asking about the Nifty. That's more or less my view in the Nifty as well. I mean, we passed through the first area, but I would be very, very careful with this area. We have an unfilled gap here, which coincides with this horizontal support resistance zone and the 50% fib. So we're currently, first of all, testing and getting rejected from a confluence of the 200 and the 50 DMA. And even if we make it through that, I would want to see how this area is going to react, because if we get rejected anywhere between here and there, I wouldn't rule out another push lower towards 9,700. But if you want to have some kind of an exposure in stocks, and if you remember, I kept speaking about that, I would want to show you again the emerging market, the MSCI Emerging Index Fund, because actually, if we go ahead and create a ratio, which is the emerging market fund, nope, we don't want to do that, against the S&P, you're going to see that this ratio, I mean, the S&P, for example, has been clearly overperforming since 2010. So this has been, I mean, this ratio has been a huge, huge, huge bear market. But as you see, we're getting the elements of a reversal here. So if you actually want to have some exposure, I think that, you know, it's not a bad bet trying to be along the spread between what emerging markets are going to do against what the US is going to do. At least in the short term, this idea seems to be playing out. And, you know, if this is the beginning of a reversal, it has a lot more to retrace, as you saw when I actually zoomed out. Now, having to do with the DAX, very bearish development here. Why? We broke down below this head and shoulders formation. We created the triangle. We're breaking below the triangle. The next target is 10,800. The next target after that is below 10,600, which is the 61.8 from the last bull leg. And in all actuality, this is a huge head and shoulders stopping formation. It's a textbook head and shoulders formation, and its target is a lot lower. So I find actually no reason why you should be looking higher. Same here with the FTSE. So far, this looks like a bear flag in the FTSE, and it seems to be breaking lower. If you remember, I warned about the Nikkei. I had drawn that be careful, because the retest of this ascending trend line might be what rejects the Nikkei, and actually the Nikkei did get rejected from there. So I'm going to insist that the Nikkei is bearish as long as we stay below there for at least one more leg lower, which can easily take us back towards at least this previous low to, what is it, 20,320 something. So as you see, you know, there is not much looking very bullish there. Now, of course, there is still the possibility that we're going to consolidate or even push once again higher. That's why I don't have any more short exposure. I closed out my fourth short position at 26.90. So far, I've made 4 times money being short the S&P. So, you know, I can't complain about that. But currently, you know, I want to be a little bit more cautious. I wouldn't rule out some type of a choppy price action, you know, between the lows and this high. So, you know, I don't want to gain any more exposure somewhere here, because I don't have a nice place to put my my risk. So, you know, I might like the short side, but, you know, besides liking a trade, it's quite important for you to have a viable risk-reward ratio. Otherwise, you know, there is no trade to talk about. Could you provide an outlook on bonds? Absolutely. For your information, Facebook currently down in major outage per news feed. I don't use Facebook, Ziggy says. Thank you, Ziggy. Usual gaps are closed, so most likely it's not a top. Okay, so let's have a look at bonds. So let's begin by having a look at the bonds, and then we're going to go to the treasuries. So there are the bonds. Bonds, don't forget, very big corrective formation. We're about to retest the 61.8. I don't know when we're finally going to break this formation, but it looks like we want to break it eventually to the upside, because this is textbook corrective price action, right? Textbook, slow, overlapping, retracing, too little for the time spent. But in any case, since you don't know when that's going to happen, obviously the more we approach this area, which is roughly at 162.50, 163, the better the risk reward is to attempt shorts, because who knows? I mean, we can keep consolidating for a bigger period of time before we finally make a move. So now we've surpassed the middle of this descending. It's more or less a channel. It's not exactly a channel because the two lines are somewhat converging, but let's say it's roughly a channel. Anyhow, the higher we get and the closer we get to this trend line resistance, obviously the less appealing the upside is. Now, obviously, if we do get a confirmed breakout from such a huge corrective formation, that's going to be a huge bullish signal, which is going to be pointing to new highs. Okay, so there's going to be money to be made in a breakout in the direction of the trend. These, statistically speaking, are anyhow the most profitable trades, meaning trading breakouts that are in the direction of the confirmed long-term trend. Now, having to do with treasuries. Treasury is obviously rebounding from new lows. The rebound so far is not really impressive. Now we are surpassing the possibility that this is a bear flag, although we're retesting the 61.8, so I would be a little bit careful here. I would want to see more to talk about a bigger rebound. So is there a possibility for a big rebound? Yeah, sure it is. Sure there is. And even if you look at the yields, you will see that the yields actually will trigger a double top formation once we make it below 302. So I think that if we do make it in the yields below 302, that's going to be a good buy signal for bonds, because as you know, yields and bonds are exactly inversely correlated, right? So what I'm watching more carefully is the yields, because as I said, as you see, this is clearly a range and this is clearly a double top, and the daily close below 302 will trigger that kind of a formation, in which case that's going to be pointing to a move down to retest this inverted head and shoulders formations neckline once again, roughly at 2.8% yield. So this is the chart to be watching for, in my opinion, having to do with bonds, the 10-year yield. Tell me, Coach.
Yes, buddy.
Oh, I heard you unmute yourself, so I thought you.
Oh,
yeah. So I thought you had a comment.
Oh no. It's if you're trading U.S. dollar yen, you have to watch this too. So if you're looking for 110, 108 yen, probably going to get that failure.
Absolutely. Keep in mind that we've already seen a technical break here, right? Yeah. Below this trend line, and we've already confirmed this might end up being the second consecutive day that we confirm this breakdown, in which case I really believe that there is no real support until 111.50, and then if we make it below 111.50, I don't see any real support until 110. I have to admit that the downside momentum is not that impressive so far. But if you remember, I said it even when we were trading near the highs here, somewhere here we had this conversation, and I said that, listen, if you put a gun in my head and you force me to trade it, I would still choose the short side instead of the long side, because this whole move higher has no resemblance to the usual bullish moves we had been seeing after the yen bottomed below 80, if you remember. So, you know, this price action, yeah, it did lead higher, but was the momentum, was the structure one that you should trust, you know, as impulsive? Absolutely not.
Yeah, you just have to be patient. You know, sometimes we go, well, look, the yields are pressing the lows, which if it was identical, we should be at 111.50 already in the yen. But, you know, sometimes it takes more time for instruments to reach a tipping point.
I agree with you.
Just because it's not as weak as yields have been doesn't mean that, you know, you're on the wrong side of things.
Yeah, the fact though, to be very honest about that, right? The fact though that USD yen has, I don't know if it's a valid word, underreacting in comparison to what is usually correlated with, I think makes it an unappealing choice to trade. I mean, why not trade other instruments that actually seem to be reacting much better to stimulus? When I say stimulus, I mean to factors that actually make markets move, right?
So why do you want to short the relative strength or buy the relative weakness?
Exactly. So why invest capital in something that seems to be reacting much slower to the factors or to the triggers that you were looking for, when there are instruments that seem to have a much better.
Because people get married to correlations. That's why.
I agree with you, and that's why I think, and I've said it many times, that doesn't mean that this has to be your system, but my system is the following: I'm monitoring a lot of markets, so I need
to talk to your wife. There are a few correlations I'd like to divorce myself from. Can you handle that for me?
So I don't have tunnel vision, so I don't feel forced to trade something when that something doesn't really give you a big signal. So, you know, if you wanna act only on something that looks really good, since very good opportunities might come in any given instrument 3 or 4 times per year, and since you probably won't be sitting around for 3 or 4 opportunities per year, how can you increase the potential opportunities that you have? By monitoring more instruments, right? So if every instrument gives you 3-4 good opportunities per year, and you monitor 30 instruments, suddenly that means that you have 120 good opportunities per year, right? Which is good.
Okay, gold's coming off pretty good. So we do have an interview today, Steve, and Raksha Soni is with us. And last time she was on, crude was trading around 70, 75, and she had a top coming in there, and she was also constructive the dollar, looking for 97 when we were much lower than that. So Raksha, I'm looking forward to talking to you. Thank you for the thoughtful little gift of sweets that you sent me. So it's probably a metaphor for your personality. So looking forward to having another discussion with you about the markets. Raksha and her husband trade together. They have a couple of things that they do together in the trading industry. And welcome back, Raksha.
Yeah, hi Dale, how are you?
I'm good. So you're looking at the yen here too, and tell us what your thoughts are in the yen, especially after last week. Was that a signal for you when we cut back through that red line?
No, actually, the person just ahead of me, he was talking about yen, so I was just checking about the yen, what's going on in that. I'm not following this at all, but yeah, I can see some downside, some bearish sentiment in this. If I'm not wrong, it might test our last this. Can you see this? 111.828. I think it can test this level again.
Okay.
As immediate support.
Yeah. What's that level called? How do you come up with those pivot points?
Okay. So I've been reading and updating my trading style and psychology. So I came through this a thing called the buying zone and the selling zone.
Okay.
Okay. So see why this pivot has been. The pivot means at this point, the buyers, see at this point, the sellers are in action, right? So they took the market down. So this is the point where buyers and sellers act in a huge volume.
Got it.
Okay, so this point here, it acts as a resistance on 29th of August 2018 precisely.
Mm-hmm.
It has been rejected like once, twice, and thrice.
Right.
Okay, so
we could revisit it again.
Yes, buyers are still in action at this level. They are still taking the sellers are trying to get down below this point, but buyers are still in action and they're taking it up. So as per trading psychology, the sellers will again try to challenge this level.
Right. They'll try and break down under that level. You know, I see that the highest volume on your chart looks like it happened last week. It's a green. It's green. Does that mean that that was some type of buying climax up there, or what? Any indications from the color of the volume? Does that mean it was an up day, or any significance?
Yeah, green means the buyers were in the higher volume. See, if we see here, it's a doji.
Okay.
The doji. Here, the buyers and sellers are indifferent. They have agreed on single price.
Right.
So what happened here is sellers tried to put the market down till this level, the low of 113.097. But buyers get into the action again and they put it back to the pivot line. The orange line here is the pivot line. Pivot line means here the market is trying. It's acting as a resistance and support on a monthly chart.
Okay.
So
all right. Yeah. So you're kind of winging it in the end because we were talking about it. Last time you made a great call in the dollar. We had a pretty good reversal last week in the dollar. Curious what your thoughts are there.
Yeah, I'll get back.
I see you have it up there. Yeah. Okay.
So I'm sorry if I make any blunders because I've been traveling and I'm not that prepared like I was earlier. So see, here, this is the point which will act as the major resistance and support, 96.98.
Okay.
So as I have already mentioned it, that it has failed to cross the last month's high. This was the last month's high. It failed to cross it properly. The breakout is not that good. And the level is here, 97.87. This is the bearish invalidation point.
Okay.
Means the market is still, the sellers are still in control in this market. So they'll try to put this market down.
Okay. And it says T1, that's your first target. Looks like it's about 95. So with the market here, you would view any rally back towards 96, 98 as a great shorting opportunity with stops over the high.
Yes, it's an old chart. I haven't updated this yet, but when I was trading here, it failed. Then I was on the short side, and my target was this 96.12, and it exactly from this point it has shows us some kind of bounce here. So what I can do, it can again rally back and test this level, the level of 97.10.
Okay. I'd love to see it. I'm all over it, Raksha, if it happens. Maybe next week because we have a shortened week here. But yeah, that's a great look. Do you have any longer term targets if that next rally fails and we take out 96? It's got to be lower than 95 is what I'm thinking.
If I see on the lower side, just give me a moment, please.
Okay.
Yeah, if I go for the 95.15, the level here, I also see the same downside target. If it fails, if it fails to actually give a good close on this level, we can still see the same. But as far as I know, I can see a retest of this level again.
Okay. You know, your last chart, you pulled it away. I don't know if it was a weekly or a monthly, but based upon what I saw, It looks like this is being viewed in your work as just a correction, a breather in the dollar, because you have much higher targets on the other chart you just showed. I saw a dollar index target, I don't know, what was it, 112?
It was 97, I think, if I am not wrong. I haven't.
Okay.
I'm on another laptop, and all my work is there at my workstation.
Okay.
I'm just far away from that.
Okay, that's
So,
fine. That's fine.
But if I just go there, see as I
101.12. That's what I was talking about.
101.12, yes. 101.12 was the higher point, but it didn't cross this line.
Right.
That the sellers, as I said, the sellers are still in action right now. They'll try to put the market down, back
Right.
down again.
Okay.
So, yeah, if as far as I can see, I still can see downside target only of 95 as far as I can make it out from the chart right now, because it's in a bearish zone right now. At this point which I have marked here, 97.87, it's a bearish invalidation point. So once if this zone is broke out, I can see then 101.12 level again.
Okay. Any other instrument you want to share with us today? And let's
Yes.
not forget to show, if you want to show your website, we could do that today too. Okay, go ahead. Crude. Yeah, that one you nailed. It was the first break from 75 to the mid 60s, and then we had one more push, but that was a great call. It was the first one back there at 75.24. Was, you know, your call for a potential top last time you were with me, and then we pulled back to 64. So, you know, nothing wrong with being right for $10 in crude. And then we had a new high, like a third drive, and now it looks like you're getting a little bit constructive here.
Yes. See, what you were saying, that it tried to make a new high of above 75.24, but it failed. So this, again, as per a trading psychology, which I've been following right now, it's still, again, it's saying that the sellers are not ready to pay more than this level. Okay.
Right.
So from this point, bang on, it just fell like crazy. In crude, actually, I'm following this since a long time. In crude, if I go down to some smaller level, wait, I'll just show you. Was on the daily chart, I think. Yeah, this level, 2017 high, this level. See, this level, it made the new lows in 2018.
Okay.
This is a new low, which crude has made in this year. So again, on this level, 2017 high and 2018 new low, it gave a bounce back, little bit of bounce back, just a small retracement. Now I can see a further downside targets of 55 to 54 level again, first of all. And once the 54 level is once the 54 level is breached, I will see the target of 52 downside.
Okay. And maybe from there, the people that have tried it here, they'll throw up their hands. They won't try it again at 52, the bottom pick it.
Yes, see here, 200. It's a confluence of 200 moving average also.
Okay, 52.18. It's on tape, Raksha.
Yes. So
I'm going to tweet it out there when we're at 52.18.
But still, this 55.21 is still, it has to break this.
Right.
With a very good solid candle right now. So I'm just waiting for my entry right now. If it is so, then I'll go again. I short here at this level 69.
Nice.
I was and I just exit here. So I'm just waiting for any breakout for this, because I think it will go down, but you never know. It's the inventories are also about to come. So I'm just waiting for it right now. So how it reacts, let's see about that. But still, I'm on a bearish side right now.
Okay, I see that you have gold up there on the right-hand side of this chart. Do you trade gold much?
Yeah, gold and crude. Yes, gold and crude.
Okay.
Okay, gold. This has been this has been the immediate resistance. It's a
Right.
weekly chart. Let me come back.
1243 or so.
Yes.
Yeah.
Yes, it
Oh
was the
yeah.
immediate resistance. So
Right.
still it didn't it's not able to cross this line. See this line.
Yeah.
This again
Right.
it's a first bearish invalidation point. So once
Okay.
once if this point is breached, then we can see the higher levels of 1265 levels, 1265 and 1263 levels. But I
Okay.
think it won't.
It has to prove itself first, because you know, this is could still be a failing rally. Is it possible? Because I know a lot of people with their view on the dollar, it's hard for them to be bearish gold. Is it possible that the dollar could be weak and the gold not participate?
It will obviously. There's a direct connection between both of them for sure.
Okay.
There's a direct connection between both of them. So that's why I'm saying I'm just waiting for it. Right now, I'm not in any kind of trade right now. I'm just waiting for my perfect entry, because each and every point which I am right now, which the charts which I am following,
Yeah.
they are either on some kind of resistance or some kind of support. So I'm just waiting for my breakouts right now. As I said, on oil also I'm waiting for it. And from dollar index, I said, this is also on some, it's also on a support level. So I'm just waiting for a day or so to see how the market is taking us and to which direction.
So were you always that patient?
Sorry, I didn't.
That's one of the hardest things to do is wait. Were you always this patient? And
Yes.
what was it that finally you were always this patient? So it's kind of innate in you to be patient and not being, you know, FOMO. You're not afraid of missing anything, because, you know, we miss things all the time. You miss trades, right?
Yes, I miss a lot of trades, especially the intraday. Especially the intraday. I miss a lot.
That's good, because you know what? I tell people, take the pressure off, write down, I will miss trades every day, but that's okay, because there's always another one.
Yes, of course. You cannot just sit and just keep on regretting for a trade being missed, because there are all the opportunities out. If I keep on sitting like this, oh God, I've just missed an entry. I've just missed an entry here. What will happen is in another chart I'll miss another entry. So there's no point.
What a miserable miserable thing it would be. And I'm saying it because I have. I mean, and I know a lot of other people have too. They make themselves, you know what, they're never happy. They have a winning trade, and you know, I still do it. I know pros that still do it. You get out, and then the market keeps going, and you know, you leave money on the table. How do you handle that?
What I have a simple strategy, that the moment I enter a trade, it's my trade. The moment I exit it, it's not mine at all. I don't have to worry about where is it going. I might have some more on the table thing, or I might be lost or something, because technical analysis is something which you predict then when to enter and when to exit, right?
Right.
So I had made a decision that I have to exit at a certain point. That means my trade it's finished at that point.
Right.
So
it's not yours. And after you're out, you don't keep watching it and go, oh, I shoulda, woulda, coulda, that kind of thing. So you know what? You know what you're also good at, Raksha, besides, you know, I'm glad I, you know, kind of turned the conversation around, because besides being a good tactician, you have great psychology, because trading, 90% of it is in our heads. And the things that you said are definitely teaching tools. It's okay, I missed trades. I'm not going to regret it. And if I leave money on the table, my trade was to exit there. I just let it go. I tell people the most important word as a trader, as an athlete, anything, is next.
Yes, exactly. That is the perfect thing to be to be a good trader. That's what I feel. Because see, if you ask about the missing trade, a very huge trade I have missed at this level of gold, 1296. I was about to short at this level and see the way it went down.
Right.
So I'm just waiting. I'm waiting for the new entry now. So what next?
Right.
So what will be my next point, and what will be my next step to enter a trade, enter a good trade? So
how about the Dow Jones, Raksha? Maybe we'll wrap it with the Dow that's going to come in under tremendous pressure in about 10 minutes. Wondering what you're seeing there.
See, no, I am not good at that, but still, I would like to tell you that it's been moving around in between the resistance and support level. See, the resistance support level. So right now, I can see a very short-term target, target of 24856.
Okay.
A very short target of this. It can test this level.
Right.
Nothing much in my plate for Dow Jones, because I am not actually following it that much. I started following it.
Yeah, it's going to open underneath that at 24675. So big gap, going to open 370 lower. So yeah, very tough time for people that didn't learn how to change their mind. Someone tweeted yesterday that, sometimes you have to learn lessons and they hurt. And I said, well, how many times do you have to get hit in the head with a ball peen hammer to know it hurts? And, things have changed for this bull market, even if it's going to resume at some point. If you don't learn how to change your mind, you won't have any change left. So is that something that you could be flexible about a market? You don't care if you're bearish or bullish, you just, be willing, if you get new information, to change your mind, taking it a step further. It's not my style, but do you ever reverse from being long to being short, instead of being long and getting out, or being short and getting out, to reverse your position? It's a hard thing to do.
Yes, of course, I agree with you in that. See, I always think about one thing, that if you're in a market, if you're trading something, the market is not good or bad. A trader is a good or bad person, because he has to understand when to stop this, when to reverse this. It's not that easy as people say. Okay, we're entering into a trade, fine, we're about to get out like a millionaires or billionaires or something. No, it's not like that. It's a very, very task. It's you have to sit, you have to check your chart. Just don't go under pressure. What the news will be there in the market. Fundamentals will be there. But I, being a technical person, I always believe in the technical things.
What's your view on leverage?
Sorry, what? I didn't get
your view on leverage. What kind of leverage do you normally use when you're trading?
I use very low leverage. I don't go for the risky ones. No, I don't go for that.
Yeah, I wrote a song about it. You ever hear it?
Yeah, of course, for sure. It would be my pleasure.
Oh, you've heard my song on leverage?
No, I didn't. I would love to.
Oh, use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage.
Oh my goodness, that was awesome. A big round of applause for you.
Well, Raksha,
can I get a copy of it so I can make it my ringtone?
You don't know how many people have had to go to psychiatrists because they can't get it out of their head. They find themselves, humming it during the day. So really, I really appreciate you coming back and sharing some views. The best way for people to find you, besides your Twitter handle, which is at RAKZ_27. Is that I really recommend following Raksha. That's her handle, and she has Alchemist after that, so she turned lead into gold. And I think that people could learn a lot from you, not just trades, but your psychology in the market. And thanks for sharing some pearls with us today.
Thank you so much. And also you can visit my website. I have been working on that also. My husband is being into that. So
you want to show it?
Yeah, of course. Wait a minute. I'll just show it.
Sure. So you got hubby, you know, we call these honeydews. So you have your husband working on the website while you're out traveling around enjoying yourself.
No. We both are traveling.
Okay. All right.
Whatever we do it together.
Okay.
And this is our website, waiver.com. You can just come and visit us, and there are a lot of information about this, and also how to get connected with us. This is for our pro members.
Okay.
And like it's a trade journal and membership and market views and everything is there. You can just come visit here and just check. And if you're interested to get to connect with us, you can connect with us either on this or through our website also. So it's like Nifty levels, and crude and all. We keep on posting about this.
Okay. Well, there's a good resource for everyone watching, hearing us today live, and that sees the video down the road. Thank you so much, Raksha, Sony, for edifying the FACE community today. I wish you and yours a happy holiday season.
Thank you so much, and wish you the same.
Thank you, my trading warrior sister. Okay, that's a wrap for us today, everyone. Good hunting the rest of the day, and we'll see everyone to wrap the week up here in FACE tomorrow. Remember, don't just count your pips, count your blessings. See everyone on Wednesday. Thank you again, Raksha.
Thanks, Dale. Have a great day. Bye.